Hey, Dan Passarelli here. One of my covered calls is in Apple, and Apple was up quite a bit today. Now I'm short the August 15th 217.5 strike against the long shares that I have. Apple closed at 213.25, so still significantly enough below the strike price, but we have a good 9 days until expiration. So, that being said, how do I plan to manage this? Well, one thing I don't plan to do is if Apple rises above 217, I don't plan to buy them back, take a loss, roll them up to a higher strike like I would usually do. Instead, I would just plan to let Apple get called away, or if anything, maybe roll it back to the same strike, even if that strike is in the money. Now, why would I do this? Apple was cited as being up today because it announced that it would be investing $600 billion in manufacturing in the U.S. Now, here's the thing with that. Apple announced $400 billion in manufacturing under the Biden administration and announced an investment in the U.S. under the previous Trump administration. Where's the investment? Well, it hasn't quite happened yet. So is it going to happen this time? They might have some incentive to chop to it because Trump just put a 25% tariff on imports from India. But that is because India is importing Russian oil, which is no, that's against the sanctions. So that tariff may not last forever. Now, why am I talking about India? Because Apple has been moving a great deal of its production to India from China, because Trump didn't want it being done in China. Right? Biden didn't want it being done in China. So he figured they'd move to India. But what I think everyone really wants is for Apple to manufacture things here in the U.S. But there's a problem with that. I mean, it's a damned if you do, damned if you don't. If they don't manufacture in the U.S., well, tariffs, they probably won't end up being 25% in India for the long run, but there's still going to be something. Those tariffs are going to make iPhones more expensive. That means they're going to sell less of them. But if they do move to the U.S., why are they going to India anyway? Because labor's cheaper there. If they move to the U.S., labor costs are going to be higher. The input costs, therefore, of making whatever it is they make, iPhones, computers, whatever, are going to be higher, and they're going to sell less of them. So it's going to hurt Apple either way from a sales standpoint, ultimately. Just, get right down to the bottom line there. It's going to hurt their profits. So I find it curious that this big boost today, a 5% rise in Apple share price, happened. I mean, I understand the logic. Okay, maybe it'll get Trump off my back, and maybe they'll just play the string along game. And because they made the deal, maybe Trump can only fight so many battles at a time, and maybe he won't hound him. And, it'll be the same game that Apple's been playing for years. But if push comes to shove, and if Trump says, hey, where is that investment? Then, or even if he doesn't do that, if the tariffs in India remain high, I don't see Apple not having troubles. The only way they can avoid troubles is if the tariffs on India and China just go away and Apple strings Trump along. Maybe then, but I don't really see that working out from the tariff standpoint. But as much as I have been long Apple stock for years and years and years and don't really plan to sell it in the foreseeable future, I have a hard time championing this move here and believing it to be sustainable. Hope that helps. This is Dan Passarelli, Trade Smart.